Okay, everybody, we're going to take a look at the uranium market with the latest UCAST, and we'll dive straight in with the uranium spot price. And so here we've got the ARC, which has played out for UX1 U308 uranium futures. So you can see how the uranium price has been trending down for many, many years, broke out through this downtrending dashed resistance line. And if I just zoom in a little bit, you can see that in a bit more detail. The price broke out here back in 2018, and then it formed a rising channel. These dotted lines, the lower line and the upper line, marking the support and the resistance. Price temporarily came below the support line to reconfirm the arc, and it did that back here as well, and it's done it in this region as well. If I drew the arc perfectly, the arc would just be about on that point there. So you can see my forecast was what's shown by the black arrow there, expecting the price to move up and test the $40 per pound area. Price has catapulted right the way through that very, very quickly, and we're up at $50 per pound. Or thereabouts, just over, nearly 51 in fact. So a huge rise, and I do see some issues with this because the arc is a long way below us now, and we've got a little bit of an area here of resistance, I think, that we're just coming up against. So it looks to me, get rid of some of these labels, it looks to me as though there's some downside risk here. It doesn't make a lot of sense from a technical analysis point of view for the price to just keep on going on towards the top of the arc. I mean, it could do. You know, stranger things have happened, but the edge of the arc here always acts as a magnet. So I'm going to urge some caution here. I know everyone's going crazy for uranium, and Twitter is, you know, all about uranium at the moment, and everyone's getting excited. Well, they would get excited, but the time to be excited was here when nobody was interested, or even better, when it broke out down here and nobody was interested, or when it tested the arc. Nobody kind of cares down here, but the price has, you know, doubled since then. And the miners have done what they've done, which we'll go on to in a second. So just a word of caution on the uranium price itself. Looking at the, if I can find it, I'm looking for on the list here, the ETF, uranium ETF, Global X Uranium ETF, there we go. So what we've got on the Global X Uranium ETF is another arc. Sorry, I'm just hesitating there because I'm making sure I'm sharing my screen. I spent an hour recording this just recently and realized I'd just recorded my face for an hour rather than sharing the screen, which was a bit of a shame. So I'm having to do it all over again. So Global X Uranium ETF, you can see also another arc, and again it's pushing up against some pretty solid resistance here. There's a resistance zone. Goes back to 2013-14, and price has really moved well away from the base of the arc, and you can see I've highlighted that the edge of the arc here is likely to be tested at some point. And a little bit of a warning sign perhaps is this big red candle. If I zoom in, big red volume candle on this pullback here. It's got me a little bit worried, and just makes me wonder if we're about to enter some kind of corrective stage here. We've got the monthly close coming up in a week or so, just over a week, and that's going to be a quarterly close at the end of September, so quite an important close at the end of this month. If we can hold above the line here at around about $24, then that's great. It'll be a support line instead of a resistance line. But if the price comes back down below 24, then it opens up a whole range of possibilities, including an arc test that could be anywhere in this area here, which would involve a price drop of what would it be, about 30–40%. Probably not going to see it fall that rapidly, but it could well follow one of these two arrows here, which would be healthy, and it would reconfirm the edge of the arc and set us up for the next stage in the bull market, which takes price much, much higher. So that's the Global X Uranium ETF. Maybe it's not what other people are saying, and certainly with all the excitement that's going around on social media at the moment, I might sound a bit of a lone voice here, but I do want to sort of urge a bit of caution. So moving into the miners themselves, Alligator Energy. Okay, so here's an example of the type of stock. You know, when I was last year sort of saying to everybody the price has broken out, this is the time to sort of start getting quite excited and all the rest of it. You know, there wasn't a lot of interest in the uranium stocks back here last year. You had to search around for it, but since then, of course, everybody's getting excited about uranium. The price has shot up here. Now, using these ARCs, the beauty of them is that you buy on an ARC test and you sell when it gets very extended. You don't enter the trade up here. It's too risky. If you haven't got a position in this particular stock, then I certainly wouldn't be taking one now. Long term, I expect the prices to go much higher, but this looks very extended on several measures, including the distance above its 30-week moving average there. The 30-week moving average is 3 cents, and the price is currently over 10 cents. So it's a long way down to the 30-week moving average, let alone testing the ARC. So caution on Alligator Energy. Blue Sky Uranium. So Blue Sky, just making sure I've got the right candles on here as well. So Blue Sky Uranium, this is the one that we have put into our gamblers picks. I'll put it onto the monthly chart for you so you can see why we put it into the gamblers picks. It was because it's at the time that we put it in front of you at 23 cents, it was just breaking out and it was close to the edge of the ARC. Great sort of opportune point to use the ARC to your advantage, like here and here and now here. We're above the 12-month moving average, above the 3-year moving average, and we're pushing up through the cloud, pushing towards a horizontal resistance area, which is around 60 cents. Price currently, I think 30 cents. So good, a good move up on this one. And if we do come back to test the edge of the ARC or this horizontal line, which is around about 26 cents, then that's all good. That's okay. We've got some good volume there on the monthly candle. Looking on the weekly candle, like a lot of them, we've got a little bit of a worrying rise in sort of volume on the selling. This candle here, which went all the way up to whatever it was, 36.5 cents, and come all the way back down to 30. So, I mean, these things are volatile, of course, but some caution here. We'd like to see the 26 cent level hold on any pullback. Okay, Boss Energy. This one has completed its ARC. I'll put it onto the monthly chart for you. And again, the time to get interested in this was on the ARC test. That's the buy point. And then it's sort of moved up and followed the edge of the ARC. So there's been no reason to exit the trade up to this point, and it's hit the ARC target. Okay, at this point now, anything can happen. You can get a big pullback that lasts a year or more. You can get a sideways move, or it can sort of spike upwards. I suppose it's more common to get some kind of consolidation around the target area, whether it's a sideways consolidation or a sort of descending consolidation. It might come back down to the edge of the ARC, which would give you a drop of about 30% or something to get down there. So with this one, I would just also urge a little bit of caution. We've had a very strong move to the upside, and it would make sense at this point for things to cool off. Standard uranium. Put this onto the weekly because there's less price history on this one. The level to watch on this one perhaps is the 10-week moving average at 31 cents. And the support level, which is in the area of the 30-week moving average, actually, this supporting rising dotted line. As long as that holds on any back test, then it's all looking pretty positive. There's an upper resistance line perhaps developing, which I've drawn on the monthly chart there, I think. Put it back on the weekly, looks better. So that upper resistance line in here somewhere, there you go. We've only had a very limited number of touches yet, so the evidence for it is still very sketchy. So we'll find out whether this is an upper resistance line when price, or if price tests it around 70 cents. At the moment we're at 42.5 cents. And we will see how this progresses. I'll just have a quick look on the daily chart to see what's occurring there. So the 10-day moving average has stopped the price falling any further for the time being. So nothing particularly scary on there at the moment. Nothing particularly to worry about, but a break of the 10-day moving average at 39 or 40 cents would perhaps be a little bit of an alarm bell that might just signal a little bit more of a move to the downside. Consolidated uranium. Well, excuse me. Let's have a look at the monthly chart for consolidated. So you can see again, back down here was the time to be excited. April of last year, that was your entry point. You had another chance in December, and now we're looking to break above this horizontal sort of resistance area. You could argue that the line goes there, you could argue that it goes down here, but I think I'll just put it there for now because it's $2.60, and it looks as though a close above that, when we get the monthly close, will be a good signal that price is ready to continue to move upwards. If we close below that level, then it looks as though a move down, or perhaps down to 180 is probable as a sort of a back test. It's possible, of course, that the arc is drawn to the wick, as I've just done it there, and sometimes these arcs do need adjusting as they build out. It's just the way these things form over time. It's not always it's not always possible to be exactly certain whether the arc should be balanced on the wick of the candle down here, or whether it should be balanced on the body of the candle like that. It does make quite a big difference to the possible downside, because if it's on the candle wick like that, then the downside would be, well, in theory, could be down to here somewhere, less than $1. So, but either way, the arc target is up in the top right hand corner here, and we just have to monitor this as price goes on. But the ideal time to buy on this is on a confirmed arc test. So when we come back down here, and if the price bounces off the arc when it's in that position, then that gives us a confirmation that that's where the arc should go. If it doesn't, then we'll need to pull it out a little bit like that. But when you get that confirmation, that's the time to take a position, really. Deep yellow has moved a lot, and it's closed at the highs of the week, did it? Let's have a look at the weekly. Hang on a minute. Yes, it did. So that's interesting, because a lot of the others have a bit of a nasty red candle last week, but this one jumped above that resistance line, and it's closed at the weekly highs, which is interesting. Sort of contrast to some of the others. Put it back on the monthly. It's broken up through this cloud area, and the cloud is it's turning green and moving upwards, which is a bullish sign. So if we stay above this horizontal level here at around about $1.05, is that just above $1? If we close the month above that, then it's a bullish sign that this is going to carry on acting as a support line going forwards rather than a resistance line. If it breaks and we come back down, then the edge of the arc is down here, anywhere around sort of 39, 40 cents. Or if we came down at an angle, it would be down here somewhere at around about 60 cents. It just depends. If we get an arc test, it depends how quickly you get there as to what the price will be. But you can see, going forwards in time, much higher targets to look forward to. But after a move like this, which is thousands of %, the time to be interested and excited was down here at the bottom. You don't want to be getting interested and sucked in at these higher levels it just doesn't make a lot of sense. Yes, eventually it'll go up here. So if you buy in here and find yourself in a losing position, the one thing you don't want to do is sell, because it's heading up here in time. So why sell at a loss? The thing to do would be, if you've got a position in here somewhere and price comes down below your entry point, the thing to do is to, when it touches the arc, take a further position. That way, not only do you get your original money back, but the position that you take down here is going to multiply your gains going forwards. Kanalaska uranium, well, this one doesn't have an arc. I'll put it on the weekly chart. It's with this one, I think, just looks a bit clearer. There's a broad horizontal congestion area here, you could call it, I suppose, where the price tries to break up through it and fails, and the price sort of bounces around on top of it, and it has done here with this wedge formation. But price has pushed up through that congestion area, and it's come back and back tested it with a wedge, and then broken out. As long as this uptrending support line holds, which is currently in the region of 45 cents or just a little bit less, around about 45 cents. If that holds on any back test, then that's good. And also you can use the 30-week moving average at 58 cents. It's currently 71 cents. So as long as 58 holds, it's all good. If 58 doesn't hold, then it looks as though we're coming down to the support line, or worst case, perhaps test this horizontal zone here of support and resistance. So after a big move up from 8 cents to 70 cents, so what's that, almost 1,000%, 800% or something, then it makes some sense that we have a pause. When you can look back here, this huge move here where we had a consolidation and then a big move up, and that could be in the cards here, where we've moved up, consolidation, and we could potentially see another move up, quite a big move up to the upside. So I wouldn't rule that out, but as price accelerates further and further to the upside, then obviously the risk does increase as you go up, and it's better to enter on a strong back test rather than in the middle of a strong advance. So this back testing point here at 40 cents would have been a good sort of time to take a position, I suppose. Not as good as down here, of course, but I mean, those of you that follow me on Twitter will have seen all my posts last year where I was urging people to take positions in the uranium sector. Hopefully some of you saw that at the time. Forsyth Metals Corp, well, this is a long way above the arc, and at this point here at 6 cents or 5 cents, that was a point in time, 6 cents I think it was here, to get really interested. And then on the breakout here as well, we've moved up significantly since then, and we're trying to push through this horizontal resistance line just above, or around about $1. We can close the month above it, and that's a bullish indicator. I'll maybe push the line just up to there, around about $1.14 might be a better place to put it. Zoom in a little bit. $1.12. There you go. So if we can close sort of nicely above that, that'd be great. If not, then there are bearish scenarios that involve retesting the arc, of course, at any point in time, and the arc will be retested. I can pretty much assure you of that. It's just a question of when. So patience will pay off here. If you're wanting to take a position in the uranium sector and you haven't done yet, just monitor these arcs, and when the price does eventually come down and test the edge of the arc, that's your signal. Bannerman Energy, I've already shown this one with various scenarios on the month. I'll put it on the monthly chart. Various scenarios and paths for the price to come back down and test the edge of the arc. A couple of the scenarios involve coming down all the way here, which seems perhaps a bit unlikely with the way the uranium sector is going at the moment. And a couple of the scenarios involve testing the arc here. It's possible we continue straight up, of course, to around about 80 cents. This move here, I've said here that a similar rise would take us to that level around 80 cents. So a couple of these scenarios involve us going up to here and then seeing the back test. So we could see another double or more than double from here if the market wants to test that area. But we're so far away from the base of the arc now that it's a high risk strategy to take a new position at this point. You know, we were down at 15. I was going to say 15 cents. It's not 15 cents, is it? It's 1.5 cents. And now we're up at 37. So we've moved up, whatever that is, 30 times, thousands of percent anyway. So again, it's a case of, you know, the time to buy is down on the arc test or the breakout through the cloud, you know, somewhere down in this area when you've got confirmation. The more extended it gets up here, the greater the risk. On core energy, the left-hand side of the arc is missing, but we've got a sort of a right side of the arc potentially there, which has completed its destiny. So from this point onwards, the risk does increase. You could have a handle forming, sideways price action. You know, we've moved almost vertically from 12 cents to nearly $2. So it's about 18 times, 17 times move, whatever it is. Big move to the upside. And whenever that happens, then it's, you know, the risk sort of increases. So I would use the 12-month moving average perhaps as a sign of health. So $1.15. Anything above that is healthy. So a back test to that level would be healthy. A break below that, and we could be looking at some lower support level to stop the price falling further. So that's on core energy. Mega uranium is doing well. I've had this arc drawn for quite a while now, and been posting. So sometimes when you get a breakout through a downtrending resistance line, if you buy the breakout here, it's not always the best place to buy. The further to the left of the arc that it is, the greater the risk, because if you break out, then the edge of the arc is, as I keep saying, it's going to be tested at some point, and it was here. So you bought the breakout thinking perhaps that everything's great and it's broken out, but the arc is acting as a magnet over here, and it's brought the price in a bullish wedge all the way down here. See this wedge shape that it's carved out. I'll shade it in for you so you can see what I'm talking about. It's this wedge pattern here. Okay, and that's a bullish wedge, and you've got a flagpole here on the left hand side of it. You can calculate the price target by measuring the height of that flagpole, as we call it, which is when I talk about flagpole, what I mean is that is a pole for the flag to fly on. Okay, see that? So the way you estimate a target using that is the height of the flagpole added to the breakout price. So the height of the flagpole is 29 cents. Well, it is the way I've measured it there. The breakout occurred here. So 29 cents. Why can't I get it to stop on 29? Ah, there you go. So there's your target, and surprise, surprise, we've just about hit the target perfectly. So that chart pattern has achieved its aim. It's fulfilled. It's done what it needed to do. So what that means is that the next thing that the market's going to want to do is to probably force some kind of backtesting process. And it may just bounce around until it gets to the edge of the arc. It could just come straight down to the edge of the arc. Could it go straight up like this? It could, but you don't see that very often. It's a low probability scenario. and it would probably stop at one of these horizontal resistance levels. There's one in there, look. Don't need the arrowhead on that, do I? The horizontal resistance level in there. So if it was to spike upwards, it'd probably stop there before coming down and testing the arc down here. So that's a possibility. I would probably rate that at, I don't know, 20%. I mean, it could be a reverse symmetry move. That, you know, the argument would be that we've had a move down here. In fact, let me just do it properly and I'll put the angle, descent angle on for you. So the descent angle on that is, what is that, 66 degrees. So a similar move back up 66 degrees. So it would take you to that level by March 2023. Okay, so that being the case, then perhaps we are going to see some sort of, I don't know, something like this, and then something like that. I don't know. Just giving you some possibilities here. These aren't forecasts really. They're just possibilities to get you thinking about what might happen, and the fact that things just don't go up in a straight line. They'll take time, and yes, everyone's excited, but you're not going to get another 1,000 or 2,000% move when we've already had that. You know, we need some market cooling off here, some sentiment resetting. It's all perfectly normal, and knowing that that arc is there is going to give you the confidence to know that, or the confidence with the timing when to add to positions or initiate new positions. But now probably isn't the time to do that because we've had a big move, and it's far better to initiate a position on an arc test than to initiate a position after a move that's taken us up several 100% or even over 1,000%. So that's how I see that one. Okay, Sky Harbor Resources. Couple of potential arcs on here, because if you take that spike into account, you end up with a secondary arc, and that's there just to remind us that when price does come back to test the edge of this inner arc, that there's a small possibility of a spike down to the outer arc like we saw here. Again, we're extended well above the arc, and we're trying to push through this sort of zone 56 to 72 cents. It's currently at 72 cents actually. So the monthly close, I think I can get rid of this channel now. The monthly close is going to be really interesting to see whether we close above or below this zone. If we close in it or below it, then it would suggest to me that we're going to get an arc test coming up in the coming year or so, perhaps, or 18 months, and that will reset the sentiment ahead of moves up towards the target zone. So don't get swept up in all this hype that's going on in the uranium sector at the moment. It's important to keep grounded. Uranium Royalty Corp, big move out of the arc. The arc's reached its target. It would make sense to have a pullback at this point. In fact, we have had a pullback. If we look at the put it on the 8-hour chart, for example. So you've seen my sort of forecast here for a move back down to the top of the arc or the edge of the arc, and that's already started here. Could we just move upwards from this point? Well, yes, we could, but I suspect we're going to get a bit of a pullback at this point before any further upside action. And tying it in with some of the other mining stocks, it would make sense. So ISO Energy, put this on the monthly chart for you. ISO Energy has completed its first arc in this bull market, and it's reached its target and it's exceeded it, and it's developing actually a bearish rising expanding wedge, potentially. It's still early days really to be certain, but it's been tested a few times on the upper resistance line, and once, twice, 3, 4, 5 times on the lower line. So it does seem to be a bearish rising expanding wedge. So that would suggest that at some point a break to the downside and a large pullback is likely. The upper resistance area is up around $9 or a little bit more. So we'll see how high up that can progress before pulling back again. Global atomic, similar thing. It's a sort of a bearish expanding rising wedge with resistance up around $5.50. Nasty looking red candle on the weekly last week. Price has pulled back from the highs of 442 and it's at 376. So again, some cooling off there. The horizontal support level to watch is around about the $3.40. Would that be? I'll zoom in and have a look. Down there a little bit, isn't it? So what's that? $3.35. That kind of area. So it'd be good to close the month above $3.35 and confirm this as a support line rather than coming back down through it, which will open up quite a sizable drop as a possibility. Now, Western uranium, huge bounce off the edge of the arc. I've got a tilted arc there and one with a flat top as well. So that might suggest, well, this support line here needs to hold. The 30-week moving average is just about on that support line, actually at $2.51. So $2.51 is your sort of line in the sand. Below that, there'll be a possibility or the likelihood of an extended correction. Above the 30-week moving average, which is currently $2.51 and rising steadily, above that, and further upside is likely. But the right-hand portions of these arcs do look to me as though they want to be tested at some point. Fission uranium, big move up and out of my initial target zone, which I've been charting for over a year now with this arc as well. The arc's achieved its target, pulled back, developed a kind of a handle, that's a bullish wedge there, and it's catapulted out of that straight through the resistance line. So if we can close the month above about 90 cents, 90 to 95 cents, then that'll be bullish because it'll be above the target zone, this initial target zone, and this line will become a support line. So that's what we need to watch on there. The 10-week moving average is all the way down at 64 cents, long way below where we currently are. So it's the risk is a little bit higher when you're so far extended away from the moving averages. Energy fuels. In fact, I'll need to take a look at the moving averages and use a moving average indicator to start gauging the risk on these, I think. Energy fuels has a long way to go to reach its large arc target, but it's achieved the sort of target on the smaller arc there, target sort of up above $8 or $9. I mean, I've already had $9.34. So, and with this recent spike, I mean, what we need to see for the monthly close is to close above about I suppose $9.40, $9.50. We'll just have to see how it settles at the end of the month. But it depends where you put the top of that resistance zone, because it's more of a zone of resistance than a line. But above about $9, I suppose, could be viewed as a bullish monthly and quarterly close. And below that, again, that would open up some potentially short-term to medium-term bearish possibilities. Laramide Resources, a couple of arcs here. Again, it's 2 arcs because we had a spike down that we need to take into account. So that ends up giving you a couple of arcs that take these spikes into account. The inner arc guides the price most of the time, but any kind of panic likely to take you down to the lower one. Price has moved up really substantially from 10 cents, approximately 10 cents anyway, to 85 cents. So that's a move up by a factor of 8, 700% profit, and we're above this resistance line or resistance area. A close above it would be quite bullish on the monthly and quarterly close above about 64, 65 cents. And perhaps, you know, any testing of the arc in the future could be done without coming all the way down here, but instead by perhaps seeing a nice move up first and then coming to test the edge of the arc somewhere near to current levels. That makes sense. Next gen energy. So this one's missing the left hand side of its arc as well. But prices pushed through some congestion in this resistance area here, and it's reaching the top right corner of the arc. There's some overhead resistance on this line, this support line, which would give resistance somewhere around about $11.50 to $12 by the time we get there, if we get there. But with a big move up, there's got to be some downside risk here, and we had a bit of a red spike on the volume here with some selling pressure on towards the end of last week, which looks a little bit perhaps a little bit concerning, but we'll see. There's arguments for continued upside, and there's a good argument for consolidation or correction here. Cameco, this is one that I've been charting for quite a long time, since last year, and we've seen the price move up substantially, break through this downtrending resistance line, and it would be perfectly normal to see the price come back down here somewhere into the sort of sub $20 area before further moves to the upside. So got to be a little bit cautious after such a big move to the upside. We could push up into the $40 area before the pullback, before a substantial pullback, or we could be just starting that pullback now. Lightbridge Corporation is an interesting one because it's down near the edge of a potential arc here, so it's going to be interesting to see how this one develops. The arc could be here, but actually looking at it now, it probably fits better if I draw it like that, something like that. So scratch what I just said. It's not near the edge of its arc. It's yeah, okay, yeah, just ignore, totally ignore what I just said. So it's moved up from $1, whatever it was, $1.71 to $5. So it's moved up by a factor of about 4, which is less than quite a lot less than some of them. And the target is pretty high for this one, as you can see on the arc there. So I'm just trying to work out in my head what I'm trying to say. What am I trying to say here? I think what we're looking for is next arc test before I can recommend this one. I mean, it could spike up to hit, it could suddenly start to move up, but without having a confirmed test on the edge of an arc, I can't really, sort of in inverted commas, recommend this stock. It could take a bit of a plunge to the downside at any point here. Denison Mines has had a good move, like most of them, bouncing off the edge of the arc at we were down at 24 cents down here. Now we're at $2, so not far off a 10 times move, 800 or 900% anyway. If the price closes above this congestion area and resistance zone, which means closing above about $1.60, if close the month above that, then a pretty bullish scenario with perhaps some further upside potential towards the $3 area and bouncing around in here to test the arc. Perhaps the year after next. Just looking at the targets on here, we're currently at $2. Targets up at 16 or 17. Yeah, that all looks fine at the moment, but it, it does look as though some downside is perfectly possible on this one. We'll just see how we close out the month and whether we hold on to these gains. I think that's going to be quite telling for a lot of these uranium stocks. Anfield Energy, interesting one because it's still very low down in its arc. 16 cents with an arc target somewhere up above kind of $20 and perhaps even up to $40 plus in a few years' time. So Anfield Energy is very interesting to me as an investor, and any arc test down in this area here would be a screaming kind of come and buy me signal. It's not testing the arc at the moment. If it was to come down from here to test the arc, I mean, we're at 16 cents and the arc is down at, if it came down at a reasonable angle, we might hit it somewhere around about 9 cents or 10 cents. So I think the downside risk on this one seems perhaps lower than some of the others. And we're way down in the lower portion of the arc. I mean, if I put it on the non-log chart, I mean, look at that. We haven't even started yet. We're still, the price is still down here, right at the very bottom. You can't even see it. It's only because I've got it on a log chart that you can see all this price action. The log chart, you notice on the scale, as you go up in price, each square that you move up, it moves $5, and then the next square is $10. Whereas to move up a square from here, you don't have to move several dollars, you just move a few cents. So it means that these movements down here that are just a few cents are just as clearly visible as the price movements up here, which are several dollars. That's how a log chart works. And you use a log chart when the price moves logarithmically, which means you move from a few tenths of a dollar to, or in fact that's well, 4 cents to 40 cents to $4 to $40. You see, you're changing each time by an order of magnitude, which is why you use the log scale. North Shore Global, half an arc is better than no arc. Right-hand target is achieved. Some kind of pullback consolidation, sideways grind, or something is quite probable here. Could carry on shooting off to the upside, but when you look at where we've moved from in the last year and a half, from $15 to $86, the risks are relatively high compared to the reward at the moment on this. I would say it needs to probably digest some of these recent moves. Bit of a red candle there as well to bear in mind on last week's price action. Pure Point Uranium, put this on the monthly. Looks like we've got an arc in play there, although it's not all complete. But we'll keep that arc on there just as a reminder or a guide. This horizontal support level around about 9 cents. It'll be good to see that hold. It'd be good to see us stay above the cloud, this red Ichimoku cloud, which is starting to turn green. And did we have, what kind of candle did we have on the weekly chart? Bit of a red candle there as well. So reasons to be a little bit cautious, and we're going to have to wait and see how we play out this month. The price action is actually now getting above this volume resistance. You see all these candles on the right hand side, these blue and yellow candles. That's volume associated with these prices, and as price gets away from this volume congestion, it can be prone to more swift moves to the upside, a little bit like this swift move here. So we could see upside spikes, but the arc is always there to be tested and reconfirmed. Uranium Energy, not so satisfied with this arc really. We've had quite a few touches on the top left, but just sort of one down near the bottom there. So it's not a very satisfactory arc with lack of confirmations. But on the weekly, we had a good green candle on this week move last week. Sorry, I'm talking about on the monthly. So we've got a good green monthly volume candle, but I suspect if we go down onto the weekly, yeah, we've got a red candle there on some selling pressure after these recent gains. Again, the time to be interested with this was on the arc test or the breakout. The higher you go, the greater the risk that you take your position and end up underwater when the inevitable back test comes. UR Energy. I mean, I hope this is all being useful for you, because it kind of builds a picture. You know, there's no, you can't give it's impossible to give specific predictions of exactly where it's going to be, exactly where it's going to end up, but it kind of builds up a picture for you that of risk versus reward, I hope. UR Energy, how's the risk reward on this one? Well, we're moving up towards this horizontal resistance zone, which is somewhere up around the $4 to $5 or $6 area. We've broken above a declining resistance line, but back tests can happen at any point. And we've moved, how much have we moved up from 34 cents to over $2? So just doing the math in my head, so it's about 6-7 times move. It does look as though it probably wants to get up to this upper resistance area. I mean, we've got a potential bearish rising wedge there. I would use perhaps the 30-week moving average, which is $1.62, as a level to watch if price falls below that. It's $1.62 at the moment, but it's rising quickly all the time, of course. If price was to fall below the 30-week moving average, then that would be a little bit of a warning sign. Centris Energy. This is quite an interesting one because it's close to the edge of its arc. I'll just zoom in on the arc. So just see if I can see that the arc edge fits quite well there, but there's a little bit of a violation of the arc at the bottom there. Pull it out. I'll pull it out as far as it can go. There we go. Perhaps that's the place to draw it and take the that candle and that wick into account. So so this horizontal line here at around about just under $32, I think it looks like. Zooming in, bring it down a little bit. Just closer to $30, isn't it, I think? Help if I got it horizontal. Yeah, it's pretty much bang on $30. 29.5. Call it 29.5. So if price closes the month above 29.5, that's good, because then this line becomes a support line going forwards rather than a resistance line. If it comes back down below that 29.5 level, then an arc test is quite possible, somewhere down, I don't know, anywhere between perhaps 12 and there's quite a big price difference there. And then, you know, you trying to estimate where the arc test might occur, all you can really say is that it's going to be, could be in there somewhere, but that spans a range from about $12 all the way up to about $35. So you just have to watch the price as it gradually moves towards the arc and be ready to pull the trigger when it hits it, when it touches it. That's your ideal entry point. Could it just spike up here? It could do. Yeah, it could spike up to $60 or up to the next level here, somewhere around $130. So it could do that and then come down, test the arc. That's perfectly plausible on this one. But you know, the time to take your position, I keep saying, is on the arc tests. As long as we remain above the well, this is the monthly chart. So on the monthly chart, you can see the 12-month moving average is supporting the price really nicely. So that's at 22.88 and rising. So call it $23. Remaining above $23 is bullish, and especially closing above this sort of area around about $29 or whatever I said it was there, $29.5, then that would be bullish as well. And you can see how the cloud has turned green, and we're getting above this volume area. Okay, Azaga Uranium. Azaga Uranium's hit its ARC target. Huge moves from down here at 7 cents, and now we're at 67 cents. So it's nearly 1,000%. It's about 800 or 900% move. Just looking at the so 5 to 55, so 50. So 50 cents onto 37.87. We've just about hit the. So this measured move target using the flagpole here would take us somewhere close to 90 cents. We've hit 80. So we've just about almost reached the target that would be defined by this flagpole here. You kind of add that height onto here. It's a log chart, so this price distance is smaller here. Anyway, what I'm trying to say is that we may well have just about hit the target area, target price on that. And so we may well see a pullback to the edge of the arc. So reasons to be cautious on that one. Paladin Energy. I've got some annotations on there just to suggest that it's quite possible that whatever move to the upside we see here, that we get an arc test in the next year or two. So, I mean, I know there's a lot of stuff, social media and Twitter and everything about uranium going to the moon, and in the next 6 months or 12 months or whatever, and it could do. But these arcs are telling me that price is going to pull back at some point, and there'll be entry points over the next year or two before probably taking off more substantially after 2024 is my view on things. GovEx I've covered extensively over the last couple of years, and those of you that followed me on Twitter before northstarbadcharts.com will know that I was trying to get people into GovEx down here. In fact, you can look at the success stories on the website here, click on the tab, and you'll see the GovEx journey, along with Energy Fuels and a few others, I think, just as examples of what I was posting at the time. So in a way, I'm sort of assuming that a lot of people got in down here and heeded my sort of advice. But I guess a lot of you here on this website will be quite new to the uranium sector and sort of either taking positions now or wanting to, eager to take positions. And, I'll just urge some caution, because we've seen these big moves up, and I've said it several times in this CryptoCast, this UCast already. The time to take a position is on an ARC test. Okay, when you've had the ARC test and you've had a big upside reaction, that's not the time to take a position. Yes, it could carry on. Price could double or triple from here, but we don't know that. All that we know is when you get an ARC test, the odds are stacked in your favor. Once you've had the ARC test and a price explosion upwards, the odds are no longer stacked in your favor. So if the odds aren't stacked in your favor, why risk it? Would be what I'd say on that. UEX Corp, second to last one, penultimate. A double arc on this one, spike lower created the outer arc, and again the time to take a position was on the arc test or the breakout. We've had a good move up into this horizontal sort of congestion area that's in here. If I just adjust this line, you can see there's another sort of line of resistance in here. So we're hitting that now, so it would make sense to my eye anyway for the price to pull back substantially from here and give us an arc test. So I think the general theme from this podcast is to have some to be cautious here. We've had some very good moves. We could see a kind of an explosion to the upside. If it does happen, it would be quite violent like that. And then the losses would be even bigger for those that just got in. You can imagine price falling from $2.50 to 37 cents, and that would leave people absolutely astounded in what the hell's going on with the uranium market and why are people making such a fuss about it and uranium is dead. Well, those would be the people who aren't observing the technical analysis and aren't aware of the presence of arcs and what they mean and what the support lines of an arc mean. So just use it to your advantage. You know, all I can say is stack the odds in your favor when you see an arc and it's confirmed. You know, at some point, one or two of these arcs will probably fail and something terrible will happen. And, you know, there's no 100% guarantee on these. They're just stacking the odds in your favor. There's no 100% guarantee. But when you get an arc test, it puts you in a strong position for the almost inevitable move to the upside. Okay. I say almost inevitable because sometimes when you get price can hit the edge of the arc, you go, right, okay, I'm going to buy here. You need other supporting evidence, like perhaps here you've got a horizontal support line as well, and you might have the moving average in the same area, and that all adds to the evidence. But sometimes the price just goes apparently through the edge of the arc, and that's because you've got well, either a secondary arc in this case, or the arc just needs to build out further to the right, and you're seeking out the actual real touch point to the arc. The target remains the same in the top right hand corner. The only thing that's happened is the time that we're going to take to reach the target has extended out by a few months, or you know, a year or two, whatever it happens to be. Depends how much you're extending the arc. But so arc failures usually aren't actually arc failures, they're just the arc still forming. Okay, so we can't always be correct about the predicted edge of where the arc is going to be. We have to use a lot of evidence to gather together to give us our best stab at where the edges of these arcs are going to be. And the more touch points you have, the better, because that gives you that confidence. And that increases the odds that you're correct, or that, you know, that I'm correct and Patrick's correct in the arc placement. So I hope that's kind of helped a little bit. You know, not all arc failures are actual arc failures. They're just arcs which are still growing. And cardinal energy is the last one here, and talking about price being extended. The arc started here. We've got a base down here, nothing in the middle, which is quite unusual for price to kind of go out across the arc and then suddenly drop like it did there. You know, at the time you would have not known where the edge of the arc should be placed. You might have had it something like that. So you're thinking, oh, that's an arc failure. Well, it's not. It's just that the arc is very oddly shaped. So the arc target, again with this one, there's some, you know, you could have the arc here, or you could have it extended out to here somewhere. It just, what's changing is the time that we're expecting to take to reach the target. That maybe looks quite good there. So maybe something like, I mean, there's got to be some downside risk on this one when you look at how violent that drop was there. Any kind of what's the market cap on this stock, I wonder? Let me just have a look. Cardinal Energy, where's market cap? 500 million. That's a big enough company. How does that compare to Energy Fuels? Energy Fuels, 1.38 billion. Okay, so it's perhaps one of the smaller ones. The reason I'm looking at that is because the smaller the market cap, the more volatile the price movements can be. You know, you don't need so many people buying and selling to cause something like that. But yeah, it worries me a little bit that you've got such violent moves down there, and we've had such a rapid move up. price has moved up from 30 cents to nearly $4. So it's over 1,000%. Pretty sure that the bull market in uranium's got a long way to go yet. You can see that the 3-year moving average hasn't even turned up yet, and we've seen a 1,000% move. So it may well be that these arcs that we're looking at end up being down here in the bottom right hand corner of the chart, and in the years to come, well, between now and 2030, that you get really big price movements on some of these to the upside. I certainly expect new all-time highs for many of them. Just how high, I don't know, but these arcs could well be just the beginning of this bull market. So all this stuff that's going on down here, it could end up being fairly unimportant in the grand scheme of things. So it's good to keep the bigger picture in mind. But as I say, at the moment, if you're looking to take positions, this probably isn't the place or the time to do it. Wait for the ARC tests when they occur, and have the courage to trust the ARC and pull the trigger at that point. It's always better to buy after a large pullback rather than when the sentiment is great. I mean, sentiment is brilliant at the moment. Everyone's excited. Compare that with the gold and silver market at the moment. Gold and silver, everyone's pretty much giving up and selling up and going home at the moment. So that tells me that we're probably closer to a bottom in the gold and silver market than we are in the uranium market. Gold and silver's sentiment is rubbish. So we're probably close to a local top in the uranium market and a local bottom in the precious metals sector. Talking about precious metals, I sort of do expect them to show weakness, a little bit more weakness before putting in a good run over the next couple of months probably, but more on that in separate posts as well. So that's it for the UCast for now. If anything significant changes, or when something significant changes, I'll give further posts. Otherwise, probably do another UCast update in about a week. So that's a wrap, everybody. Thanks for watching and listening.